Why would you exit from the best investment asset in the world if it keeps getting better? Like, there's nothing you can buy that's better. So you're selling the winner to buy the loser. If problem is gold is a defective asset on a non-existent network.
Hey everyone, and welcome back to Wealthy Value. The US government has pushed a total of $9 trillion into the economy so far. With tax dollars so desperately needed, it's fair to assume the IRS will focus on cryptocurrency. But what if you could trade crypto tax-free? Here's how to do it in 30 seconds. Step 1. Open a crypto RIA account with our friends at iTrust Capital, the world's largest crypto RIA platform with over $3.5 billion in transactions and no monthly fees. Step 2. You can transfer your existing IRA, roll over your employer plan, or make a cash contribution through ACH transfer, bank wire, or check. Step 3. Start investing. Available assets include not just Bitcoin and Ethereum, but also Cardano, Chainlink, Polkadot, and all major cryptocurrencies, as well as physical gold and silver. All digital assets are held in offline cold storage with the leading institutional custodians, Curve and Coinbase Custody, which are both insured and backed by the largest venture capital firms in crypto. Use our link, itrust.capital/value, in the description below to get $100 in Bitcoin when you open and fund your account with iTrust Capital. And now, back to our video.
Bitcoin is a crypto asset. It's not a cryptocurrency. It's a tragic misnomer. And because people call it a cryptocurrency, then it lends itself to a shallow criticism that it's not good as a currency because the central banks will ban it, and because the tax treatment is poor, and because the transaction rate is low. But again, those are all red herrings. It's not a currency, nor does it need to be a currency, right? Anybody thinking about it for even a few seconds realizes that if there's a taxable event every time I transfer it to you, it can't be a currency. So right. So no, it's not a currency, it's an asset. And if you think of it as an asset, it's very helpful, because then you realize it's not competing with the dollar and the euro. It's competing with gold and silver. It's competing with bearer instruments, and to a certain degree, it's competing with bonds as a store of value, and it's competing with ETFs like the S&P 500 index as a store of value. The first reason is because it's a taxable event. And you're a fool to accelerate taxes on your own person by a decade. The second reason it doesn't make sense is because it's a long duration asset that's deflationary, which means it's likely to go up in value. It's been going up 150 to 200% a year every year for a decade. So why would you pay $1 million in Bitcoin to buy something which is going to depreciate in value, when the $1 million in Bitcoin may very well double 1, 2, 3, 4, 5 more times, right? So it's a long-term investment asset. A much wiser course of action would be to borrow money against Bitcoin. If you have an appreciating asset, never sell it, finance it. And if the asset's appreciating at 20% a year, and if the interest rate is 5%, then it's pretty obvious what you ought to do is keep the asset, pay 5% interest, because the tax bill on money that's borrowed is zero. So you could live off of your borrowings against your appreciating asset for the rest of your life, without ever paying the asset back, without ever paying the loan back, and without ever paying any income tax, and without ever paying any capital gains tax in the US. I would prefer to invest in things like on hold for a decade, if not 100 years. But there are plenty of people whose job is they're venture capitalists. And the venture capitalists are betting on things where they think there's a 90% probability it'll fail, but they think that they'll get 100x return if it hits. So it's a different thing, right? So I would say it depends on your portfolio of money. Like what kind, are you investing someone else's money, your own money? Are you a VC? Are you a private equity investor? Are you A saver converts their money into a strong currency. An investor manages a portfolio of risk. I buy some Apple, some Facebook, some Google. They've all got risk. A trader manages a portfolio of risk derivatives. I'm guessing, I've got options in Apple, and I think that Apple's going to beat on the next quarterly release.
Right.
It's not even a portfolio of risk over a decade. It's a portfolio of risk over 90 days. Or it's the second derivative of risk. I'm like shorting Apple options against Google options because I think the spread is coming in, and it's something you can do.
Right.
It's just a different thing, right? I'm arbitraging people's risk derivatives, and fine, knock yourself out if you're bored. I think Bitcoin is the best monetary inflation hedge in the world. If you know that that the central banks are going to expand the currency supply, then the most important thing you can do is construct a portfolio of high quality assets that are scarce, that are going to appreciate in price at a faster rate than the currency supply expands. And so that means Bitcoin, because it's ultimately scarce and fungible. You can transfer it anywhere in the world, and people with money are always going to want it. And after that, perhaps clearly the home that you want to live in the rest of your life, trophy real estate that has tangible value to you, perhaps trophy art, a Mona Lisa, something which is extremely scarce, a Van Gogh painting. If the currency supply increases by a factor of 10 and you have a very scarce piece of art, presumably the price of the artwork is going to go up. The best thing going, of course, would be scarce assets that you can finance. So if you have a home that you love and you can get a 2.5% mortgage for the next 10 to 30 years against it, then it makes sense to maximize the mortgage, hold the property. When the money supply is expanded by a factor of 10, if your home is in a place where no one else wants to live, it won't go up by a factor of 10 because it won't be scarce. But if you've got 3 acres in the Hamptons on the beach or in Palm Beach, right? If you live in a truly desirable community, the price of the home is going to go up. And as the price goes up, your loan's going to be fixed. You'll be able to refinance the home. You've got leveraged equity, if you will, or leveraged property. I think Bitcoin fits into that. Bitcoin is appreciating at the fastest rate, faster than the NASDAQ or the S&P or luxury real estate or average real estate around the country, because it's the most scarce. There is no exit strategy.
No, and I mean, do you think that we'll see some sort of a Fed vehicle like the 1031 exchange that would allow you a move out of something like this into something else, a like-in-kind asset? I mean,
see, the point is, why would you exit from the best investment asset in the world if it keeps getting better? Like, there's nothing you can buy that's better. So you're selling the winner to buy the loser. If problem is, gold is a defective asset on a non-existent network. Why is it defective asset? Well, I mean, it peaked in the 19th century, but it's not thermodynamically sound. You can make more gold at the nature level. The miners keep dumping gold on the marketplace. They spend $100 billion a year to dump gold on the marketplace. The difference between that and Bitcoin is Bitcoin is capped at 21 million. Gold is infinitely increasing in supply. I mean, the second reason it's defective is because there's like 90,000 tons of gold sitting in jewelry. So whenever the price goes up, people melt down their jewelry and they recycle gold to drive the price down. The third reason the asset's defective is because there's no protocol to synchronize paper gold or the gold applications at the banking level with the underlying physical gold, which means that paper gold or gold derivatives can short the physical gold 100x or more. That means that as the price of gold goes up, gold bankers and gold sellers keep dumping more gold paper on the market to hold the price back. So I would say gold is hopeless. It's really a tragic, hopeless asset. The thing that's special about Bitcoin is it's an asset plus a network plus a protocol. The asset is capped at 21 million and is only going to shrink. It can never go up. People can lose their Bitcoin, but they can't create anymore. The network is an open network, which means I can move a block of $1 billion of Bitcoin from here to Tokyo in an hour for a few dollars. And, that'll eventually be moving $10 billion and then $100 billion. So it's a very powerful final settlement network. If you wanted to move $1 billion of gold from New York to Tokyo, you're talking 3 months and $5 million. You can't. So gold is tragically centralized. There is no network. And then there's no protocol. The protocol of Bitcoin means PayPal can integrate 330 million mobile phones into an underlying Bitcoin network and keep them synchronized with integrity. You can withdraw your Bitcoin off the custodial exchange, and that means that the exchange can't go 100x naked short on the Bitcoin. If they do, there's no fractional banking, or it's fractional banking at your own peril in Bitcoin, because look, my company doesn't have 2.5 billion worth of Bitcoin. We have like 5.5 billion worth of Bitcoin. We can take it anywhere we want to any exchange in one day. So if you were to, and we got it in cold storage. So if I had $5.5 billion worth of Apple stock, then the bank could short it and lend it out to drive the price down. If I had $5.5 billion worth of gold, it'd be sitting in a bank, and other banks and bullion bankers will write derivative contracts against it and short it, and they're working against me. The reason that Bitcoin standard will work is because the custodial rights of 5 billion people are unprecedented. There's never been a property in the history of humanity that gave the people more custodial rights. If you have a $50 Android phone in Zimbabwe, you can walk around with $10,000 worth of Bitcoin in your pocket and nobody knows you have it. The key is the protocol and the network, because the network guarantees that anybody that holds substantial amounts of Bitcoin have custodial privileges, and they can move it between any jurisdiction and any custodian in order to avoid counterparty risk and avoid being victimized by the custodian or the province of custody. If New York wants to tax it, I can move it to Wyoming. If Wyoming wants to tax it, I can move it to Switzerland. If I don't trust the bank in Switzerland, I can move it to Singapore. And if I don't trust anybody, I can move it to my own phone. And if I don't trust my phone, I can memorize the seed phrase and put it in my head. Because they've lost confidence in conventional strategies and conventional money, conventional bonds, conventional treasury strategies, because they've lost confidence and they've literally lost hope, they're being driven to speculate more. And the result is the GameStop saga. The result is the Archegos saga, where they put on a huge leverage on equity. The result is the SPAC explosion, where people are literally buying speculative shell companies that do nothing but potentially do something that we don't know what, but they figure that's better than holding cash. They're being crowded into cryptos, and I think that the wise ones are buying Bitcoin because they understand that this is sound money for the next 100 years. But I also think that people are speculating in other cryptocurrencies, and it's not that different than the GameStop thing. People are looking for something other than to wait and watch their money get debased.